Hello there. Welcome back to Introductory Accounting and 4. In this video, we want to look and we are going to look at the preparation of a statement of financial position extract, and we are also going to prepare the notes to the statement of financial position. The question reads: the following trial balance appeared in the books of Fat Cake City on 32 of Fat Cake City on 32/2022, which we need just need. So moving on our required parts, first part says draw up the statement of profit or loss of Fat Cake City on 32/2022, of which we prepared the statement we got as our as our as our profits, which is our net profits was 479,000 that we got according to of profit of changes equity on 4 point. The statement of financial the X to the statement of financial position. We prepare the statement of we are also going to prepare 4.4. So we know that notes to the statement of financial position comes as pre-calculations that are done before you prepare the statement of financial position. So obviously we need to go through the notes first, then obviously we transfer those final balances from the notes to the statement of financial position. So moving on to our answer section, you are going to see that statement of financial figures that we are going to take from to go to 4.3, whereby 4.3 is not to the statement of financial position, whereby we're going to start on the note for property, plant, and equipment, which is note number 1. We've got a column for land and buildings, for equipment, vehicles, and then the total. So we are going to have our description for carrying value at 1 July 2021, which is at the beginning of the period. So if we refer back to June 2021, which means it's starting the previous year, which is 1 July 2021. So value at 1 July 2021, 2021. And to see that the figure that we have to refer back to the question, you see that we are given our balances at 10 June 2022, which is at the end. But if you check the balance that we have for landed buildings, 580,948, if you go to additional information, there is nothing about any movements in terms of what transpired during the year of landed buildings. So what it means is the balance that we have at the end is also going to apply at the beginning, which is 580,948. So we enter it as such, whereby you're saying 580,948. Moving on, you see that we also have another 79,267. So it's going to does not have any information about movements of non-current assets. So we come here. Under equipment, we've got 479 because we have 458,245. Okay, we have for land and buildings, 1,580,000. Carrying value at 30 figures, the same figures. So basically, that's what we have in terms of our related buildings. Then our related buildings is our non-current asset. We've got also equipment and vehicles. So what it means the figure that is supposed to be transferred to the statement of financial position is this figure that we have here, which is 1,518,460, which is the total carrying value of the non-current assets at the end, is one that is supposed to, according to our statement of financial position, we also have a section for non-current assets where we are going to say property, plant, and equipment. So if you go down, you see that this is information from note 1, is indicated here. We have got note 1. So we are just going to give a reference of note 1. So here we will note 1. And the total that we got is 1,518,460, which is the total for carry value at the end. But from there, we check again in terms of the next note. So as we prepare the note, then we transfer the figure in the statement of financial position. So the next note that we are going to prepare is on inventory, whereby we are going to use the figure for closing inventory, the one that goes to the statement of financial position. So if you come here, you see that the figure for inventory given it here is 358,475 in the additional information. That is after a physical stock taking on 30 June 2022, which is at the end of the year. So we take the figure that we have there as our inventory, whereby we have a title for inventory. Then here we're going to say trading. Trading inventory. And then the figure that we have is 358,475. So you see that this is the same figure that is going to represent the total for our inventory. So if you check it, we are supposed to close. This is the figure that only figure that we have for inventory. So the same figure that's going to represent our inventory, which is 358,475. Then obviously we have to transfer it to the statement of financial position. So we refer back. You see that for the statement of financial position, we've got current assets. That's where we're going to have our inventory. So we say inventory. Then we've got a column for notes. We refer back that where we got the figure is note number 2. Sort of figure that we got is 358,475. So basically, that's what we have on that part. Then we can move on to the next note, whereby the next note we are able our financial assets, and we start by non-current financial assets. So what we are going to do. So we are supposed to refer back to our question and try to see what figure we have in terms of non-current financial assets. So if you refer back, see that we've got fixed deposits, no bank, 40% per annum. We've got 29,320, which is a non-financial asset, non-current financial asset. Then 29,320, which is fixed deposit. So we come here and we indicate that one, whereby we are saying fixed deposit. So with that, the only non-current assets, non-current financial asset that we have, which is 29,320. So we can as well close and have our total on top, which is going to be the same figure. So this is the figure that is the total one is the figure that is supposed to be transferred to the statement of financial position, whereby we now refer back and we know that other non-current asset we've got also a non-current financial asset of fixed deposit. So basically we just refer back and we are saying fixed deposit. Which is 29,320. So these are the two non-current assets that we have, so we can as well close. Then we add the two to get the total. 1,518,460 plus 29,320, and then we get a total for 1,547,780. We took our fixed deposit, we can just refer back. It's note number 3. So we come here, we indicate note number 3. Then we move on to the next note, whereby we go to current financial assets, where we look for trade and other receivables. We refer back to the question. We see that we've got trade receivables control, 56,850. So if we have other receivables like prepayments of expenses, accruals of income as also, but in this case, we only have 56,850 being represented by trade receivables control. So we refer back. We are saying trade and other receivables. And then we figure that we have for trade and other receivables, we've got 56,850. Which is, and then this is represented by trade receivables control. So here we have trade receivables. So if we have prepayments of expenses, we're supposed to list the total for trade and other receivables. But in this case, we only have trade receivables control, so we can just close, which we are having the same figure. So by now, we now also transfer that figure to the statement of financial position, whereby it's supposed to go under current assets again, it's trade and other receivables. So we trade. And we know that this is not number 3, with an amount of 56,000, 56,850. We refer back to our notes, whereby we now move on to cash and cash equivalents. So we can we have cash and cash equivalents. So the total for cash and cash equivalents is supposed to come in. So we'll list the cash and cash equivalents that we have requested. For example, petty cash, we've got the bank cash float. They are all cash and cash equivalents that we can list beneath, and then the total comes in. So we check according to the balances that we are given. We see that we have got bank. We cannot include it because it has a credit balance. We know that when it's a credit balance, it's a bank overdraft and it's a current liability. So we're not supposed to put it under current asset. So we go to petty cash. We got petty cash 3,521. Moving on, you'll see that after petty cash, we are also having cash float. It's also part of cash and cash equivalents, 2,640. So this is what we have on that part, and then we add the two, since these are the only cash and cash equivalents that we have. We add the two to get the total, which we are going to get the total is 6,161. So this is a representation of cash and cash equivalents, and you're seeing that we are taking it from not number. We can just formulate our notes whereby we are saying this is still not number 3, so we can just refer to note number 3. Whereby we are having our total is 6,161. And then from there, you see that these are the current assets that we have that we can now add to get the total. So 358,475 plus 56,001, and then we get a total of current assets, which is supposed to be 421,486. And from there, you cannot be able to get your total assets, whereby you see non-current, I get the total for total assets, whereby you get it as 1,969,266. According to our answer section, we also have non-current financial assets. Remember, the financial statement of financial position, we're supposed to show only the asset section. So here we still have the notes continuing, whereby we now have the non-current financial assets. So we can as well non-current financial liabilities. If we have them in the question, we are supposed also to include them there. So we refer back to the question to see if we've got non-current financial liabilities. You see that we've got a loan, CED Bank, 16% per annum. So we refer whereby we have got loan, CED Bank. We have a loan CED Bank, 16% per annum. with an amount of 20,750, which is the same figure that is supposed to be the total. Then we go to non-current financial liabilities, whereby we are going to have them listed beneath, whereby the fair value again to check them, whereby we have our trade payables control, 43,547. $43,547. Check if you still have any other 7,546. $67,546. So basically, this is what we have. We check again if we see any other current liability. See that we've exhausted the current liability that we have, but obviously we need to add the two. We are going to get 111,000. 111,093. And obviously, we need to close it. So those are the current financial liabilities. And obviously, we need to check in terms of the last part that we have on statement of changes in equity. On statement of changes in equity, we are going to start with the balance at the beginning. That is 1 July 2020, 2021. Let's just try to refer back. 1 July 2021, which we are given capital is 1,443,653. So we are saying this is our opening balance that we have for capital. Remember to calculate our closing capital. We say opening capital. So we are supposed to say net loss. And then you obviously, so this is, so we start with our opening capital, which is going to be. So here we can say balance at the beginning. Let's just say balance, which we can put 1 July 2021. And from there, we can now put the balance, which is at the beginning, which is 1,443,653. And then from there, we add net profit for the year, which we indicated that net profit for the year, we calculated in the previous video on the preparation of the statement of profit or loss, and we got it as 479,240. So here we are saying 479,240. We add it, and then we get the total for the total after adding net profit becomes 1,922,893. And then obviously we less our drawings, which are 3,470. Then you say 1,922,893 minus 93,470. Then you get your balance 820,423. So basically, it's 1,829,423. So basically, this is because the so this is 30 June 2022. So basically, this becomes the last part of our question. That is question 4 from the question paper of November 2024. So thank you for listening. And hopefully the video was helpful. And please let's not forget to subscribe and share to our channel and share the link to our colleagues who are doing introductory accounting and Let's meet again in the next video. As for this video, I'm out.